Well, good day all. Ira Epstein, and here we are with your SPDR ETF market wrap-up. And this wrap-up is for Wednesday, the 7th of December, 2022. I was late today. I went out last night celebrating the completion of my outside day course. I'm so excited to have got another course finally done. You know, I have so much to teach, but trying to teach and understanding what you've got and get it down into videos where people can follow it and understand it is never easy. It sounds so much simpler than it is. Remember, I'm teaching at all levels at one time, and it's got to make sense. Now, sometimes people don't agree, but the courses that I put out, we get a big following on, huge following. So I have completed that course. Behind the scenes, the IT are working on it. They got to get it on the website, and it should be up with any luck this weekend. So be ready for that, and thank you and for putting up. Now, I'm also next week probably going to do a couple of special reports. You've seen me do those in the past. Remember the last one I did was an S&P, and knock on wood, what I said was fairly accurate. I'm not going to do a rehash just yet of the Santa Claus rally. We're too far out yet. Plus, I want to get through one thing. I want to get through the FOMC meeting. What I think's going on right now is traders came to realize that when the jobs report came out last week, they got it wrong. They really got it wrong. And they drove everything up going, oh, this is great. Well, what was so great to wake up the great giant, the Fed? The Fed had been talking, should they be pivoting? You all wanted to hear that, okay? And why I don't know, but everybody wants to be the first kid on the block, like the group that Donnie Wahlberg is in, whatever. And they want to be that kid. And they want to say, I got this market at that turning point. You got a long way to go for that. That's number one. Number two, the Fed has said they're data dependent. Do you think the data we're getting out is showing pronounced weakness, that the Fed's going to pivot? If you do, what are you reading? What are you, I guess, smoking before you read it? Because something's not making sense. What we want to see is weak data, PPI, CPI. It doesn't have to fall apart, but it can't do what it is, which is like watching paint dry. It gives you a slow ratchet down. The Fed wants to see some movement in it. Without that movement, if you get a good PPI, stronger than expected this Friday, and CPI next week before the FOMC meeting, if I'm on that Fed board, I'm vocal. Let's stay at 75 basis points. We can always lower in February. Let's make certain that this lag effect kicks in and that we're not wobbling. We get a little weakness and we go back up like that. That's the problem the market is having. And I think I've given you the battleground. Now we are seeing suddenly analyst upon analyst, banks, brokerage firms, they're all predicting how the recession is going to kick in 2023. When everything gets so one-sided, the first thing that happens is, I know you don't think I'm from another planet, but I am, my horns come out. It's rare that everybody joins the same side and the event happens in the world of finance. That's all I'm saying. That does not mean I'm saying we won't have a recession. I don't know. It's hard to get a recession. First of all, I think we're in a slowdown. And I had said a long time ago, I thought we were in a recession when the housing market started coming undone. You've got my videos. You watch me regularly. I've been saying this for 2-3 months. And you think housing's not in a recession? I laugh. Now, yeah, Toll Brothers came out with great earnings today, but what do they do? Custom homes. Oh, does their type of client need to go to a bank and get a mortgage? Well, if they do, it's probably not for the amounts you think or the percentages you think. They're well heeled. Gee, is Toll Brothers just out there building spec homes? No, they're not. So they're doing real well because they've got the niche, the guy that has the money. They're building it in a way that they go. My own brother-in-law is building another home right now, all right? And he's got the funds, and that's what he's doing, all right? And, when he has to get his loans, he'll do whatever he has to do. But he can afford to do that. Well, there's plenty of people like that. Don't get me wrong. There's plenty. And homes are selling, and rentals are going on still strong. And I know we keep hearing, well, the rental prices are going to fall. And they do. But is it a tsunami down, or is it just gradual ratcheting down? Because when people don't have the money to buy a home, they're still going to be forced to pay a lot of money for rent. That's just how it works. Supply, demand. Okay. So when I look at the markets and we look at BABA, we had that big rally. But since China's been saying they're easing, actually doing what they said in this case, they released more rules today, Wednesday, as to how it works. They've been backing off through here. Interesting. It was the lead up to it, but the event, buy the rumor, sell the fact, you've sold off a little bit in the market. Is the trend over? It isn't. You're still with higher lows, higher highs in the market. Where did we stop? Oh, I forgot. What's wrong with me? The 200-day moving average. You hear that all over TV every day. I didn't make it up. I followed it, okay? I learned from other people with it. But that is a big average. It's a one-year average when you think about it. And you get up there, you often fail. Now, you'll often stop at the 100 with it, but you're always looking for combinations of things. Example, the Bollinger Band. You already know you only spend 5% of the time over or under a Bollinger Band, so it's natural resistance or support. The market can run it, but it rarely is going to just stay day after day after day under or over. You can see that back here. You see it over here. Can you get a spike or two? Of course, you want to. We're not making the reading on the Bollinger Band. If you set your parameters 100%, it'll never be hit. Why show anything on the chart? You want it to be able to hit it so you have a natural inflection point to come out of, be it shorts or longs, depending on your own trading rules. I know mine, I teach it in my course. So I think the pros have been coming out of the market and you're overbought. Are you going to embed? Well, it takes to embed, you got to have 3 days in a row minimum where your readings are over 82 together. So you did have it today. You had it readings day before Tuesday. Oh, you didn't have it the day before on Monday. So do we typically embed? No, more times than not, you get down to these numbers, you turn away. So is tomorrow one of those days where, in theory, we could do some more dropping? Yeah. But if it does embed, it changes me and I get bullish again until that red line then closes under 79. So I have an immediate game plan. When I come to LIT, which is the lithium and battery techs, higher highs, lower lows, that flipped around today. With today making the higher high just the way it is, I've got higher highs, higher lows. My brain worked, my fingers didn't. But the resistance here, you need to close over that 18-day average. If you do, you're bullish with stops then under this low, looking for the 71.69. But you first got to get up and close over that. Apple snookered me because I was not counting to get stopped out the other day, and I lost. I told you, I'm Mr. Swiss cheese. I do lose for my clients. I felt terrible because I called it right. I said, there's no way Apple can do well at this holiday season when Foxconn can't give them the phones and people can't get the phone and you go to buy it and they tell you nicely. Everybody at Apple, you go to a store, the nicest people I've ever met. I mean, ever have met. These kids are great. And, you know, they're caught. Well, I can get it for you, but you're going to probably get it in January or February. Okay. Does it turn off the sales? Well, you're not going to lose every sale. You can give a picture of it. You can say a gift, or you want to get it anyway. So you'll say, well, I'll buy it now and you'll send it to me then. But you lose a lot of sales because people hear about it. And I would be going, well, why am I going in? I'm going to have to wait. I'll wait till I can get a shorter period. Knock on wood, I went quickly when they came out, got the one I wanted, the colors I wanted, and I'm happy. Higher high, lower low. By the way, I traded in an iPhone 10. So I'm not one of these guys that every new release, you got to get a phone. I have friends that are, and I go, why? I don't get what you're doing. But that's them. They got the newest gadget because they can. In Disney, again, let's talk. This is the ramp up time to Avatar. I want to see it. Who doesn't want to see it if you saw the last one? Who doesn't want that fabulous experience? How many years has it been since James Cameron gave us something like that? And he always bends the thing. Think of Terminator, all the things this man has done. I realize it's coming down, but it can carry the day. I think the pros are going to cover their shorts at 90.52 and disappear for a little bit. That wouldn't surprise me. Now, if it flops, big problems. I don't know how far down you go, but you're going to go down in a big way. Do I think it'll flop? Absolutely not. I think it'll be a new game changer. I wouldn't be surprised if it sets all-time records. You know, from the little bit I've read about it and the people they brought in and Mr. Cameron, I'm impressed, okay? Who isn't? Who didn't see every Terminator? It's crazy. I was watching Bloomberg the other day, and Tom Keene, Jonathan Farrell says to him, well, Rocky, who's never seen Rocky movies? Okay. Higher high, lower low, coming down right through here. The market lost its embedded reading. It can fall if it wants to 98. It's trying to hold on as best as it can to the 18-day average, but I don't see any reason to be long. Zero reason. XSD, the semiconductors, I was looking for the pullback. Well, now I'm saying, okay, you're in an important zone here of the lower Bollinger Band and the 200-day average, but you're in a downtrend. It's cushioning the blow, but how much demand is there going to be if we go into a heavy recession? And I know you're going to next say, Ira, they're all saying that it's going to be a shallow recession, including you, Ira. That's correct. I don't think it'll be heavy. Why? Because as long as the jobs market stays as strong as it is, come on. If you can't get a job in the industrial sector, you're going to go to the service industry. You can get work. And there's all those job openings. So I want to see the JOLTS reports. I want to see all this stuff coming out again. In the home builders, no. For the average home builder, they're getting a little reprieve because the longer that we hear that interest rates in the back end, keyword, back end, have peaked out and that the market is saying the recession's going to keep pressure. There's no way they have to go up any further. That will help the little guy in the home builders. But the builders on their own, they're going to have to follow the Toll Brothers lead to a degree. You don't want to build too many spec homes in this market, yet you want something to sell come spring and summer. I mean, that's just the reality. So I don't say that it's over. By the way, have anyone looked at the price of lumber? You know how much lumber's down this year? You have any concept? Over 60%. So one of the big costs that stopped home building, that drove it up, has come back to earth in a major way. The U.S. and Canada should do something about those lumber tariffs and keep lumber very cheap. XLE, lower highs, lower lows, still coming down. The energy sector in big trouble. Obviously, what are we going to use? What are we going to do with it? I don't know that the cap has anything to do with this or not, because I don't understand the price cap that they did just yet. What I do know is there's another leg coming, and that's going to be on the diesel, the gasoline. That's all coming against Russia as well. But Russia is selling under $60 a barrel. The question is, if you're watching the straits around Turkey, how many ships are caught in there? Because Turkey said it wants proof of insurance. I don't think the cap said that Turkey had to do that. Not in any manner whatsoever. Turkey took it upon itself to do that. Why, I don't know, but it's certainly pushing some of these markets down. That's at least what I'm reading. In the gold market, you've suddenly gone sideways. Now, is this the number that's going to finally propel the market for a breakout? Going sideways, spinning, try to build a base. That's going to be the big question. I say up because I do believe that gold has more to it on the upside. Silver the same? Could be. It's corrected. If you look at the slow stochastics, they are screaming, don't buy me. Any number over 70, the way I teach them, the market is saying I'm overbought. Copper's in a corrective mood. It ran up going into all this action on COVID. Buy the rumor, sell the fact. Oh, the rumor, China's going to release, cut back, change the zero tolerance policy. And they have. Past tense, they released even more of that today. So the market's backing up. Now we have to adjust to what is the demand. Did anyone look out there to the Chinese export-import numbers today? Their exports, they were looking for a decline of 3.7 or 5%, something like that. They got over 8. I mean, big amount of problems they're having, okay? The world's not buying their products right now. People are turning elsewhere, and that's going to be a permanent turn. Permanent. Remember what I just said. What they did to themselves under President Xi was they shot themselves in the foot. And once you lose a client, and I know this all too well being a businessman, you don't easily get that client back. They forge new relationships and they move on. You don't want to lose clients. It's terrible. TLT, people are betting that interest rates are going to stay low. UUP. So now you have to figure out in the dollar this. This is going to be the hard one. What the Fed does next, is it bullish or bearish the dollar? That's what you got to figure. Are higher rates bullish or bearish the dollar? And if you think it's an easy answer, you got it. Write a paper. People want it all over the internet because there's two schools of thought on it. One school of thought, and that's what's working right now, and that's what's causing this, is at first we'd have the highest interest rates. You want to own dollar-dominated, whatever. Stock market, could be anything. Then you enter the second phase of the cycle. Well, the dollar's so strong, or interest rates are going to go up so much where the economy is going to shrink because of it. The government's going to say, we got to shrink this economy, which is where we're at. Hence, the break from the Fed. Why should that change? I don't think it will. So I'm not in the camp that's bullish the dollar. I'm still very much in the camp that is bearish the dollar, bullish the euro and other currencies against the dollar, and that's where I'm going to sit for a little bit. So, interesting couple of days coming at us. It's probably that good time to keep a lot of non-positions as a trader. Keep your hands in your pocket. Get some of these reports out of the way. Then we have the opening right after the FOMC to make our moves in the market without getting reports that we have to worry about. There's going to be that government action one way or the other. Now remember pivot points. In markets that are going sideways, this is your friend. Learn the importance of this. This is a really cool thing to use because you find a middle zone in the market, the pivot point itself, which is the white line. Then you get resistance points to sell above with the idea of buying back, or buy below with the idea of coming back. And it's a day trade. That's all it's good for. It's not good for position trading. If that's what you're looking for, this is not the tool. But it's not just for day trading. Let's assume I'm looking to come into the market and I say, gee, I really want to be long as a position. I'm getting the break in the market. Where might it go? I turn to pivot points all the time. I'm always looking at them as one of the potential ways to work into a position. So this, by the way, is a free course. So I do a couple every now and then that are just totally free. It's a video course. It teaches you how to use the points with the slow stochastic reading. My way of slow stochastics, slightly different version than yours. You can get the slow stochastics from me when you're a paid subscriber to my research. You got to go in and modify them. And it's not as simple, the front panel of it, and I'm going to make those changes. It's behind the scenes, very easy to do. And I give you the whole formula. So any charting service you have, just put in the formula, create your own. It'll match what mine do here. Simple enough? All right. Go to our website under free offers or click up here at any time and away you go. I'm Ira Epstein. Talked a lot tonight. I will see you tomorrow. Take care.